Hello, Cleveland, and everyone from everywhere else. Welcome to your 10-minute TA. Let's dive right in, shall we? Alrighty. So from yesterday, like I was saying yesterday that we were, it was 50-50 yesterday, where we could have, gone up, we could have gone down. We were looking at the Stochs underneath in bearish territory. We were saying that the oscillation could continue up, and as it does, if we didn't see the RSI break over the 50, that we would, be looking at more bearish stuff. But the RSI did break over the 50 here on, let me turn this down a little bit, here on the 90-minute chart. It did break up over the 50, over its signal line, bringing it back into like bullish territory. Not like bullish territory, but bullish territory. And you'll notice that the SAR, the stop and reverse, has also been flipped to, bullish standing. You see when it's underneath the candles, that means that price action is moving in a bullish direction. And you may maintain your bullish sentiment until this, well, not until, but one of the indicators for you to change from being bullish to bearish is when the SAR flips to the other side. If it's above, you're bearish. If it's below, you're bullish. It's basically a price level at which that would be a good spot to stop, to set a stop or reverse. Excuse me. Not all exchanges offer that kind of thing, but MEXC does. That's where I do most of my trading. I do some on weeks as well. That's available everywhere. MEXC has a bit more KYC that you have to do and some extra hoops to jump through. But anyway, we'll notice that when price action did come up, it did get stopped by this downward trending resistance that is the top of this bull flag. Let me move the pole back to the pole's position so that it looks like a flag still. There we are. We can get rid of this downward trending support, because if we extend it outwards from here, it'll be under the support. It's just no longer relevant, really. I mean, we can remember that it's there. It could still act on price, but we're going to delete it for now, and we can remember that it's there if we need to. All right, let's see. Okay, so let's see. Where are we at now? We're at a point where we're basically just hanging out in this bull flag. The SAR has been flipped, so we're looking at some bullishness. However, the stochastics are now pointing to the downside, so the oscillation is downwards, which means that there is more likelihood for downside today. However, if RSI gets, just like yesterday but in reverse, gets stuck here at the 50 or finds support here at the 50 or even just off of its signal line preferably, well then that would maintain its bullish posture. And if it can then afterwards find an even higher high than this one right there, waking up over 65 basically, well then we can expect some more bullishness. But how far up? Well, we got these resistance here that's stopped us a few times. We got that 99.6 we got to break back up over again, which stopped the price action here once. But once you're over that, and once you're out of that, then, hey, this bull flag's moving. And the measured move of the bull flag, well, we move the pole to the breakout point, and we're looking at about 107.3. All right. So, hey, look out for that 107.3 move. Or look out for some sideways movement. Regardless, like we were talking about yesterday, we need to just have price action stay over that 94 to put in that higher low, maintain that higher low on the higher time frames. Okay, on the 6 hour, adjust this a little bit, but you'll notice it did break out upwards from the symmetrical triangle there, and that could be a good sign. We're looking at strong Stochs, although in overbought territory at this point, so they could turn around and head back down to oversold territory. Now, if they do, we're going to watch, just like on the 90-minute chart, we're going to watch for this RSI to stay over its signal line while the stochastics reset all the way down and start turning around. Now, if they can do that and price action can maintain sideways movement, well then, hey, another chance for moving upwards, hopefully, breaking through that 99.6 level, hopefully getting up and over that 104 level and all, it would be even better. Yeah, let's move this fib retracement off a little bit. There you go. You see that on the fib retracement, we are hanging out in the golden pocket of the fib retracement. The golden pocket being a common reversal area. Common reversal area is for where price reverses, Now, I'm not saying that it will, but it does happen often where price action comes down into that golden pocket and then reverses on up from that golden pocket. How high up? Well, we got our resistances on the way up, including the fib retracement. You could look at the fibs as resistances as well. You see that we have come up to them basically already before, and perhaps we'll come up to them again. Now, if that measured or symmetrical triangle does play out to the upside, it has a measured move of up to 105, which is the same as this measured move on this bull flag. Interesting. We will rise together. All right. But yeah. So the same measured move from the symmetrical triangle to the upside, if it goes to the upside, is 105. 105 would be great because that would put in, a new higher high over this last one and change this downward trend that we're seeing with the lower highs and lower lows, and those patterns, usually with lower highs, lower lows, we call those downward trending wedges, and they usually do reverse. We've talked about this before. If you've listened to my TA before, you've heard me talk about this before. Yeah. So let's see here on the daily. Yesterday we were looking at zeros on the Stochs and talking about how could get stuck if the Stochs here on the what do you call it? The 6-hour chart, sorry. If the Stochs here on the 6-hour chart couldn't, bust up over that 50, which they did. They broke up very well. And so with that breakout, they started moving the Stochs here on the daily, which is good. That's a good sign because, hey, if the Stochs are starting to move, that means strength is coming back to the market. RSI is starting to curl over, and we're seeing a double bottom here, an Adam and Eve double bottom on the RSI. That'll play out back to the top of where it came from, right here around 58.60. And where was price action when RSI was there? Well, that was way up here at around 104, 105. So hey, let's see if that 105 can play out. But yeah, that's where I'm looking for things to get going to this week, is that 105 area. It might take a little longer. We might see these smaller sideways movements continue for another day or so before we actually see that breakout. But can't discount the downside either, because you never know in these markets. Anything can happen, and price action can go in any direction. But yeah, right now I'm looking more so for that 105. But again, like we were talking about before, if that 94 level breaks, if support is lost, it's flipped to resistance, well then, game over, man. Well, almost. Like, we still got a few things under us that could support us, but at that point, we are losing this higher low and this possible uptrend, this change in, this uptrend would be invalidated, which would be a major bummer, man. Major bummer. All right. Thank you guys so much for watching. If you've made it this far, give the video a like. Music provided by Veloa, Luminist, and Sax Squatch. Much love. See you later.